Paradox Interactive AB. Paradox is a gaming developer and publisher famous for its deep catalog of strategy games. Notable franchise games are Europa Universalis, Crusader Kings, Stellaris, City Skylines, and Hearts of Iron. Paradox is a quality company in their sector, meaning that they are consistently cash flow positive, stable, profitable, and owns a fair few games with very long tails. This means that there are low risks in the business model. If a new game fails, they have consistent cash flows from legacy games. They don't need to rely on any debt and returns cash to shareholders for dividends, as well as developing new games and downloadable content to old games. At a share price of 172 SEK, the market cap is around 18 billion Swedish kroners or 1.8 billion US dollars. The company has great economics and trades at a lofty price if looking at sales, earnings, and free cash flows. More on this later. The company is founder-led through a quality CEO in Fredrik Wester. He is integral to the firm, and the company has been through tough times in the periods where he hasn't been the company CEO. He recently returned to the firm with new inspiration and dedication. I will start off with a brief look into gaming accounting. As many are aware of, the field of accounting has a bit of a struggle when it comes to intangible assets. We constantly see intangible assets dominate the equity markets, where growth and scale continues to surprise market participants. The rise of the Magnificent Seven and the longevity of these companies' intangible assets are evidence of this. So how does this relate to Paradox, a small gaming developer from Sweden? Well, the thing is that gaming developers does not have a lot of fixed and tangible assets. Tangible assets are the assets that the accounting rules were meant to cover. But the development of software is hard to accurately incorporate on a balance sheet. When Paradox makes a new game, they have to capitalize the cost on the balance sheet, but not all costs are allowed to be capitalized. This could mean that for a given year, accounting earnings may be too high due to higher capitalized costs, and then the next year the earnings may be too low, as some costs are not allowed to be capitalized. Meanwhile, a game may perform badly, meaning assets on the balance sheet must be written down. A different game may perform better than expected, meaning that return on invested capital and return on equity is very high in a given year, despite not being a good proxy for future returns. When a gaming company releases a game, the company amortizes the development costs of the game. IFRS accounting rules leaves a lot up to the companies themselves in how they account and amortize such assets. This means that a lot of costs ends up in the balance sheet as intangible assets would have to be written down in the future. Some costs are not allowed to be capitalized on the balance sheet, meaning that valuable research and development are not on the balance sheet despite obviously contributing to future cash flows. Needless to say, accounting earnings and the assets on the balance sheet is of limited value to investors. So why do I say this? First of all, accounting is not as precise a science as you may think or hope. And this is even worse when it comes to gaming developers. The accounting earnings of Paradox doesn't really tell much valuable information. Also, the consistent cash flows from the firm doesn't really indicate much of future cash flows. In general, accountants are too focused on accounting earnings, and finance people are too focused on cash flows. And this is especially true when it comes to companies like Paradox. When looking at the financials of Paradox, it's helpful to look at a rolling 3 or 5 year basis. This is because a game release may artificially boost a given year, while other years are spent doing R&D, which drags down the earnings. After release, Paradox amortizes a game faster in the beginning and then has a regressive method of accounting. This means that the cost related to a game is higher when a company's sales are the strongest. This is a way of matching sales and costs to each other. One of the strengths of Paradox, however, is the long tails of their most popular games. Games released many years ago continues to produce strong cash flows for the firm. This is due to maintenance work on the games called downloadable content that are released years after the initial release. This extra content produces cash flows and earnings by itself, but also leads to a bump in the sales of the original game. New gamers are introduced to an old game, and cash flows keeps on coming for Paradox. We can see how this can make a very strong flywheel effect and strong business economics. Despite what I said earlier about the complicated accounting for gaming developers, Paradox shows quite stable and strong earnings and cash flows. This is because Paradox is amongst the best in the business, as well as having a very strong business model. Their games has a very loyal, long-term customer base that buys every new game as well as DLCs. The risks in a failed game is not as big as it is for some other gaming producers like CD Projekt Red with their infamous release of Cyberpunk, and Ubisoft with their Assassin's Creed games. The strategy games from Paradox are much more reliable and replayable, meaning that the business risk in Paradox are a lot lower. The revenues and earnings of the company on a rolling 3-year basis consistently grows between 20 and 30% per annum. This is very strong growth, but the question is whether it will continue. The bread and butter for Paradox is of course the release of new and anticipated games. It has been fewer and fewer of these in the last couple of years. We have seen declining returns on invested capital due to some failed games and big write-downs. Coming up in Q3 is the release of Bloodlines 2, which is very likely to flop. A silver lining is the release of Europa Universalis 5. This game simply has to sell well if 2025 and 2026 should be a success for Paradox. I foresee quite a bumpy ride ahead for Paradox. The release of Europa Universalis 5 is very important, and reception and sales numbers must be monitored if you are to invest in the company short term. However, a lumpy stock price could be very interesting for a potential long-term investor. The core games of Paradox has very long tails, as well as consistent cash flows through DLCs. These intangible assets are the reason why the financials of Paradox look so enticing. The return on invested capital, growth in revenues and free cash flow looks very nice on a chart. I believe short-term noise from bad releases in Bloodlines and potentially Europa Universalis could give some very interesting opportunities for a long-term investor. Paradox has no long-term debt. They have very strong economics and a de-risked business model compared to other gaming developers. The CEO is the founder with both skin and soul in the game. With a scalable business model, I believe a share price below 150 could be very interesting for long-term owners. Today, the company trades at 172 SEK per share, which is quite fairly valued compared to the free cash flows. The free cash flow yield is around 3.5%. However, I foresee a bumpy ride ahead for the stock price, where the market will focus on short-term problems and noise. This could leave a possibility for a sharply declining share price and an opportunity to get a decent price for a long-term secular compounder with great economics and low business risk. Thanks for listening. This is not financial advice.